right. Good morning, everyone. Thank you so much for joining us this morning for the February virtual Coffee and Commerce event presented by Joanne Leasure, the CEO of Day One Accounting, and Patrick Best, tax attorney for ARM Lawyers, sponsored by the Lehigh Valley Hospital Pocono. At this time, I kindly ask again that anyone who is not presenting today, please make sure your video cameras are off and your mics are muted. I will invite you to unmute and resume video later in the program during Q&A.
Thank you so much, Liz. In just a few minutes, Joanne and Patrick will dive into the importance of properly preparing accurate and easy to reference financials to ensure that the information can be utilized for loan applications such as the PPP, personal mortgages for the self-employed, and for tax purposes. They will discuss the importance of quality processes and the consequences that can arise when businesses' books are not kept properly. If you have questions throughout the presentation, please feel free to submit them in the chat section or wait and ask them live at the end during the Q&A session.
I would also like to recognize today's sponsor, Lehigh Valley Hospital Pocono. With us today, we have Dr. William Kors, who's the Chief Medical Officer for Lehigh Valley Hospital Pocono. So Dr. Kors, thank you so much for sponsoring our 2021 series. Truly, without you, we wouldn't be able to put on these valuable events for our community, so we are so grateful. So without further ado, I would like to turn it over to Dr. Kors to offer us some sponsor remarks.
So thank you very much. I'm in my office by myself, so it's safe for me to take my mask off. Message today is very simply about vaccinations. We encourage everyone, if you've not already registered, to receive a vaccination when your priority group comes. We are strongly encouraging that you do so. There are two ways of doing that. One is to go on mylvhn.org and register. Registered in order to receive the vaccination, even if you're not a patient at this health system. The instructions are right on the landing page, and it will guide you through how to register. For those who are not tech savvy or don't have internet access or prefer not to do it that way, there is a telephone number, 833-584-6283, where we will accomplish the same thing. We are as frustrated and disappointed as you are with the speed of the vaccinations. I want to assure you that Lehigh Valley Health Network is capable of doing 30,000 vaccinations per week if we had enough vaccine. Supply has been a problem, and we know you're out there, and we know that you're waiting, and we are making every effort to work with the Department of Health and state, federal, and local officials in order to secure enough vaccine. Real quick things. People ask about side effects of the vaccinations. I've had 2 shots. After the second one, I felt a little funky for about a day, but compared to what we saw with hospitalized patients with COVID, that's nothing. And to me, it was a great sign that my body was actually working to produce antibodies. And then the second thing is just please be patient. Like I said, we know you're out there. The vaccines are safe. I know there's a lot of people that have concerns about the speed with which they were developed. But if you do some back, you will find out that Pfizer's partner, which is German, and Moderna, which is a United States biotech company, have been at work developing these type of delivery systems for over a decade. So with that, again, I just leave you and encourage you, sign up, mylvhn.org or 833-584-6283. So be safe and be well, everyone.
All right. Thank you so much, Dr. Kors. And if anyone else has any questions on vaccine or anything along those lines, please feel free to reach out to us or LVHN directly. We'll be sure to include the direct links in the follow-up email today. But without further ado, I would like to now pass it over to two of our industry experts, Joanne and Patrick. So the floor is yours. Thank you for joining us today, and we are very excited for your presentation.
Great. Thank you so much, Liz. I'm just about to share my screen. I hope you guys can see it. Can you see it?
Yes, we can.
Okay, great. So I'm Joanne Leasure, and I looked around the room and saw that I know a lot of you. And so hello, good morning. Patrick and I work very closely together because we share the same types of clients, and a lot of my clients come from Patrick. So one day we got on the phone and started to discuss what are these reasons why business owners continuously, come to Patrick and, and then need my help in order to get them, up to snuff so that Patrick can actually help them. And, we called this gaining efficiencies in your business books, finances, and taxes. And so what does that mean? Well, just a couple of questions. Do you have a good bookkeeping and accounting software program? Do you know the difference between independent contractors and employees? Are you having vendors fill out W-9s before you begin working with them? Are you asking your employees for documents like I-9s and W-4s? Do you know what a balance sheet is? And if someone were to ask you for it, it's ready to go. And that's just, top of the line. But I wanted to, and I had to put this little picture together. This is Patrick. He has written several books. He's not only the attorney at Arm Lawyers, but he owns his own practice called Best Tax Solutions. And any one of these books are amazing. I've read them. And I have to tell you, I've learned so much. So I wanted to start with Patrick asking you, what do you find is the biggest problem that your clients come to you with when they're business owners and self-employed?
So oftentimes, I kind of see two types of clients. I see clients who are in trouble. So there was some sort of problem that pushed them to me. And that's either they have an audit by the IRS, they have incredible tax debt, and the IRS is taking some sort of collection action like a levy or maybe a tax lien. And then I also have some business owners who are trying to be a little bit more proactive, and they realize maybe that they might be paying too much in terms of IRS debt to the IRS. So coming from all those different perspectives, there's one common thread that I see, which is oftentimes these business owners don't necessarily have what I will call clean books. Many of these business owners are keeping their own books. They are doing it in a way that is easy for them. They may be doing it on an as-needed basis. So what does that mean? If your books are a pile of receipts and you don't ever put anything together, you don't put together a profit and loss or a balance sheet until it comes time to do a loan application or your tax returns every year, that could be an issue. It's a common issue that I see. As Joanne mentioned maybe a minute ago, if you should be able to produce a profit and loss statement and a balance sheet with a couple clicks, and it should be up to date at all times. When I talk to clients and I say, can I have your current profit and loss? And they tell me, that's going to take me a couple weeks. I'm a few months behind on that. That's probably the biggest problem that I see. Yeah.
And I noticed that you send them over to me. And a lot of times what I notice is it's not going to take a couple of weeks. Their estimate of how long it's actually going to take to gather almost, if not more, a year's worth of, transactions. It takes a lot more time, and it takes a lot of planning and a lot of interviewing with your clients. And I know that when I first start off with talking to people, I definitely do a thorough interview process just to kind of understand how their business works and how they get money and how they spend money. And then once we have that down, and I've either cleaned them up or I'll either clean them up or at least teach them a workflow process, because I noticed that when it comes to bookkeeping and accounting, the issue is that there is a workflow meaning that how do you gather your receipts? How do you gather your invoices? Are you making sure they're getting into the system? Are you making sure that, when you sign a sales contract with one of your clients, that's getting in the system? Are you making sure that when they pay you, you're applying their payments to that invoice that you created for them or that bill that you created for them? And what happens is if you are doing something yourself, you're not realizing that this workflow, these are the things that need to actually happen. Are there any other types, Patrick, of issues that you find maybe with payroll or, sales tax even that, different clients may not understand?
Yeah, payroll is a constant problem. That's an excellent example for a lot of reasons. I mean, you mentioned one earlier, which is, do you know the difference between an independent contractor and an employee? And you may say you do, but I have a lot of clients who kind of flaunt that. And they say, no, they're independent contractors. I pay them with the 1099. Well, it is true that you pay independent contractors with the 1099, but paying someone with the 1099 does not make them an independent contractor. The IRS has very specific rules for whether or not someone is an employee or an independent contractor. The state has very specific rules. One of the things that people forget about are things like insurance, workers' comp insurance, for example. If you think that paying someone a 1099 may save you from workers' compensation, you are probably wrong. If they are acting like an employee, they may be an employee. If they get injured on the job, you can't use the defense of, well, I pay them with the 1099. It just simply doesn't work that way. So with payroll, the biggest thing I see is exactly what you mentioned, Joanne, which is, are you getting the proper documentation when you start? Are you getting the W-9? Are you doing the I-9? Are you doing the W-4? Are you doing all those things that you're supposed to do when you're onboarding an employee? Are you properly categorizing them as an employee or an independent contractor? And in terms of processing the payroll, are you doing that correctly? Some of the clients that I have that get into trouble are the ones who tend to float their payroll taxes. And if you're not familiar with that term, what that means is you may process your payroll on a Friday and your taxes may not be due for another week. So what you do is, instead of putting that money aside, you would use it, and then with the expectation that you would replace it by the time that it was ready to come out of your bank account. Sometimes that money's not there and you end up in trouble, and you're constantly borrowing from yourself and trying to push your payroll taxes through to try to make it so that you're not behind on payroll taxes. But those payroll taxes are nasty business. The IRS takes them very seriously because you're essentially taking your employee's money. It was supposed to be sent to the IRS. It was theirs. And if you don't pay it to the IRS, it's almost as if you were stealing it. So they take it very, very seriously.
Yeah, absolutely. I have found in my experience when a client is in trouble with that they may have hired an admin person who possibly had told them that they have done payroll in the past. And, you don't know what you don't know. And what they really meant when they said that they've done payroll in the past is that they have really just, gathered together the timesheets and maybe even input time. But all of the ancillary things that need to be done in payroll have never been done by them. And they wouldn't even know to ask or look it up or anything like that. So, there are things that are missing, like we just spoke about, not gathering the proper documents for each employee. Even something as simple, as making sure that you have your employees, not just contact information, but emergency contact, right? Because people move, and you're supposed to be delivering W-2s. So you want to make sure that, if the W-2 comes back, you can at least contact them, right? Find them or something and let them know that we have your W-2. But also just the fact that they don't know when they're supposed to submit the taxes. They don't know that there are local taxes that are involved in our area. And they do not do any kind of reconciliation or calculation at the end of the year to ensure that those taxes are actually appropriate. There is a tax that, is like $1 a pay. So the fact is that if the person worked every week and you're paying them every week of the year, that should be $52. So it's a big indication that there's a problem if it's only like, say, 24. So those are things that you want to, those are things that you want to actually check. And my recommendation always is that when you are hiring somebody and you ask them the question of whether or not they have done payroll in the past, ask them something, ask them deeper questions. How did you do the payroll? Who did you pay? How many employees? What did you do? What was the process? Do you have, something that you can offer us as far as some good advice? Just get a real handle. Not to say that you don't want to hire them, but if the case is that they're not the person who is an expert or really have done payroll, then you need to make sure that they have the proper tools. And proper tools may be that you have an outside payroll company come in and they, are the liaison between you and that payroll company, just to make sure that you are on the right foot. And payroll is a very small price to pay when to know that it's actually done correctly. There's no reason in all of your business why you wouldn't want that payroll to be right, because it can be detrimental to your business.
Yeah, and is that person filing the quarterly forms, either the 941 or are they filing your yearly 940? Because if they don't know that they're supposed to do that, you may not be filing all of the forms you need with the IRS. And trust me, they know, and they will come back and ask you for it. And if you don't file it or you don't file it timely, there's penalties for that. Even if you paid the tax and did everything else correctly, there's penalties for not filing the forms on time. And that, again, it's another important thing. If you're doing the payroll in-house, make sure that the person who's doing it is taking care of every aspect of it. And if they're not, you need to consider outsourcing portions of that, but at least know what's being done and what's not being done.
Yeah, absolutely. Absolutely. So you mentioned when it came to payroll, workers' comp. Can you let us know what have you seen with workers' comp as far as what happens if they don't have it?
Yeah, workers' compensation is actually where we see this the most, because I don't handle workers' compensation cases, my office does. Mm-hmm. And we'll get calls very frequently from people who were injured, and they'll call and they'll say, look, I was hurt at work and I don't know if I'm entitled to workers' compensation because I'm paid with the 1099. And we would conduct a more thorough interview. So tell me a little bit more about your employment. Does your employer tell you when you have to be there? Do they tell you when you're allowed to leave? Do they provide your tools or do you provide your tools? Do you have liberty to do the job as you want, or do you have to do it in a way that the employer tells you to do it? You'll notice that the more control that you exert over the person, the more likely it is that they are an employee. So in the workers' compensation context, those are the types of things that we would try to establish. So I have worked with people in the past who have worked or paid people by 1099, called them independent contractors, but gave them schedules, said you're supposed to be here at 9 and you leave at 5. That's probably an employee. Independent contractors don't work like that. Independent contractors, that's like if the quintessential independent contractor is like Mary Kay. You sell when you want to sell. You do it how you want to do it, when you want to do it. If you don't want to do it in a particular month, you don't have to do it. Uber is an excellent example of an independent contractor. I can shut the app off and I can never drive if I don't want to drive. And then I can work all weekend if I want to. That's an independent contractor scenario. If you tell someone that they have to be there at 9 o'clock and they can't leave until 5, they're probably not an independent contractor. And you may be on the hook for workers' compensation. The problem is it's actually a crime to not have workers' compensation insurance for an employee. And the state does take that very seriously. So if you pay someone by 1099, they are injured on the job, they file a workers' compensation claim, it's determined that they were actually an employee, you can be charged with a crime in addition to the fact that you would owe all of the money to that person for the workers' compensation claim. To be clear, the state would pay them, and then you would have to pay the state back. So you would owe, and you're not covered by insurance for that amount. So you owe every dollar, and you could be charged with a crime. It's very, very serious, and you're not being crafty by giving them a 1099 in a way to get around that. You're just putting yourself at risk.
Absolutely. And I know that when I'm advising clients on payroll, I make sure they have their workers' comp, and it's a very simple process. I ask them if you'd like to use your broker, great. If you'd like to use someone that I recommend, I will get them linked up with you so that they're in compliance. Because at the end of the day, I personally believe, as I speak to people, that they really do want to be in compliance. I mean, everybody wants a discount, but they don't recognize kind of trouble that they can get in by not having things in place like workers' comp. So you mentioned also, just kind of going back, you mentioned also an audit. Why would a business owner be up for an audit? What causes that?
Well, there's essentially, I'll call it 3 kinds. So there's the random audit. Those do exist, where it's like a quality control audit where you just got bad luck and you were picked off the line for an audit. No fault of your own, maybe not your tax preparer's fault. The books are in order. You may be fine, but they do quality control audits. The rate of those audits is less than 1%. So it's really not something that you should stay awake at night worried about. Other types of audits, the automatic underreporting is probably the most common. That is an audit that's flagged by a computer, because you have to remember the IRS knows everything about you. They know every W-2 you received, every 1099, every 1098, you name it. If you got a form, the IRS got the same form, or at least they're supposed to. So the computer, as a preliminary check, compares your tax return, the gross income on your tax return, to the documentation that they have. And if you said, well, and I'll use a small business owner as an example. So maybe you're a Schedule C small business owner and you put that you made $70,000 gross income, but they have a total of 1099s in the amount of $80,000. You're immediately going to be flagged as an automatic underreporting. That's probably the most common audit that I see. And then the third, which is probably the nastiest, is the one where there's perceived irregularities, where if you look at your tax return closely, and I realize not many people do, you'll notice that the IRS asks you for your industry. And there's a little code at the top of your tax return that tells them what you do. The IRS knows what is expected for any given industry. And if you have unusual expenses for your industry, they know that, and they can flag you and then audit you for it. So like the most recent one that I did, it was a salesperson. He was an independent salesperson, and he just had outrageous travel expenses. Now, it's not inconceivable that a salesperson would have travel expenses, but his travel expenses exceeded the amount of money that he made. So that's a red flag. So he was audited. And then, of course, push comes to shove. I say, well, it's not a problem. Just show them the receipts. And, of course, what's the answer? I don't have them. And that's, of course, when you get into trouble. So those are basically the three types of audits that I see in varying levels of severity.
Okay. And there are ways to kind of to prevent those types of things from happening. So let's just go back to, having to produce those receipts. First of all, we have so many apps these days. We have our phones. One of the things that I recommend to my clients is that they use that to sync with the accounting software. Some of my high-level clients actually receive something a little more sophisticated, but for the most part, if you're using an accounting software, you are able to take pictures of those receipts as you have them. And if you want to toss them, then toss them. But at least your system has those, and you should be able to match your spending, meaning as your spending comes through and we're reconciling, credit card or debit card transactions, we can reconcile that and call it what it is. The other thing that, you can actually do is, first off, you should know some of the rules when it comes to your travel and why certain travels are included and why certain travels are not included. So, though there are rules to that. So recognize that, you don't want to mix business with pleasure. And, the fact is that if it happens to be, there are rules, and you're going to need to look them up or ask someone like Patrick, what part of this was actually, that I should actually put towards my business, what percentage. But yeah, it is extremely important to keep records of those types of things. Your industry, know your industry, spend some time thinking about it, looking it up and understanding what really is your industry. Because, if you pick the wrong one, then obviously that could get you into some kind of trouble. So, think those things through and don't think that they don't matter. But yeah, there are ways that you want to be efficient. And especially if you are in a business, please, you should not be doing your accounting and bookkeeping on a spreadsheet. Nowadays, just like the payroll, the cost of getting a real software in there to do what it needs to do and categorize things properly, it's minimal in comparison to the issues that you might cause for yourself. So
yeah, and I mean, when we're talking about gaining efficiencies here in the books, I mean, you mentioned apps, and I think that apps are one of the things that have made bookkeeping far easier than it may have been in the past, because it allows you to catalog your receipts, it allows you to catalog your mileage, it allows you to keep track of everything at the push of a button. So there's really no excuse anymore for why you weren't able to keep track of everything or log everything that you're doing.
Exactly. Sometimes if you put the amount of effort that most people put behind looking at social media into being disciplined enough to pick up that phone and turn on the mileage app, and some apps don't even need you to turn them on. Mm-hmm. They just need you to decide to decide whether or not it's personal versus business at the end of your day. You can pretty much do that too. And be prepared that if you're going to use mileage, towards your business expenses, be prepared to have that log. You know what I mean? It's very difficult to figure it all out at the end of the year. So, be diligent. It's one thing to have, a gym membership, for instance. It's another thing to actually use it. And so same thing with apps, you're going to have to use them to be efficient. So now, Patrick, you mentioned also that you've asked people to give you clean books, or I should say a profit and loss and a balance sheet. Do they ever offer you something and then you look at it and realize that that's not what I'm talking about? Do they know what they're supposed to be giving you?
Most often they don't know about a balance sheet. That's probably the one that surprises them the most. I think most of them understand what a profit and loss is, whether or not it's in, I guess, up to snuff is a different story. Whether or not everything's properly categorized, whether it's in a usable format like a QuickBooks printout versus a handwritten profit and loss statement. Those are all different issues. But the balance sheet is one where most people don't know about it or don't know how it works or don't understand why I would need it. And again, it's for multiple purposes, but you do need it for taxes, because especially if you're a corporation or taxed as a corporation, you do have to include things like your assets, and you do most likely have depreciation for certain assets. And those are things that you need to log over time. If you're not logging them over time, chances are that you're missing out on important tax deductions, or you're improperly deducting things. But for loans, you would also need balance sheets, because banks and other lenders are going to want to know, well, how much stuff do you have? How much of a credit risk are you? And your assets are one of those indicators. Income is one, but assets are another. So the balance sheet's important for loans as well.
Yeah. Now the balance sheet, I always tell, my clients that the balance sheet tells you the value of your business. So if you were to pick up one day and decide that you want to sell it, that balance sheet is completely necessary to know, how much your business is worth. But just like you mentioned, it's actually accumulated over time. So we have your assets, which, obviously are your bank accounts, right? You've got cash in your bank accounts. Maybe you have inventory, if you're a retail business, you have inventory. Maybe you should be keeping track of it. And if you're not keeping track, as complicated as it can be sometimes with inventory, we can at least have something simple enough that we can use, a simple formula. But your equipment, I cannot tell you how many times I look at a balance sheet of, let's just say a general contractor or a plumber or something like that, who I know has vehicles. I see them on the road, right? And yet the vehicles aren't on the balance sheet. Why wouldn't they be? They are part of your assets. So your vehicles, your equipment, your accounts receivable. If you're the kind of business that things are due in 30 days, and you more than likely have some outstanding invoices out there that need to be paid to you. And if that's the case, that's an asset for you. Then on the other side, balance sheet has an equation: assets equal liabilities plus equity. And of course, since it's a add type of equation, it could be a subtract type of equation too. But your liabilities are the loans for that equipment, right? You have loans for them, you probably, or loans for those vehicles. So those things should be on your balance sheet. Another thing that you should have on your balance sheet is your accounts payable. Maybe you don't pay your bills, right away. Well, they should be in your system so that you know that they do exist. Credit cards, those are liabilities. So you want to make sure that, as you are paying your credit cards, that credit card balance goes down. I know, Patrick, you and I talked about the fact that you see on the profit and loss statement, credit card payment. And, let's face it, when you're using a credit card, what are you buying? You're probably buying supplies of some kind. So you want to make sure that those are categorized properly. Okay. And, there's a proper way, again, a proper workflow to make sure it's reflected not just on the balance sheet as your liability, but on your income statement as an expense. And then of course you have your equity. Well, what about all of that investment that you made? I have had clients who we know that you've used your retirement, for instance, to build that new restaurant. Well, that should be on your balance sheet. It should be reflected on your balance sheet. Anything that's come out of your own particular pocket, that's your equity. And you want to make sure that you are putting it in there. And depending on how you are classified as the type of business, sometimes you want to get paid, right? So if that's the case, then you're going to have owner's draw as well. And that should be reflected on your balance sheet. And those are just a few items that I've noticed on making sure that you're keeping track of. So, in going back to tax lien, I like that one, because that one, I feel as though that's a really scary situation, Patrick. When do you find a client having a tax lien? What's happened?
Generally, if you have debt of more than $10,000, you should be processed for a tax lien. They have kind of slowed down a little bit in the last year due to the pandemic, but they're now ramping back up again. So anyone with a debt of more than $10,000 is at probably in the system to be readied for a lien.
Okay.
Levies, which are actually a little scarier, which may not sound scarier, but they are. A lien doesn't actually take any property. A lien just protects the government's interest. It does inhibit your ability to sell or buy, or it certainly does affect you, but it doesn't actually take anything from you. A levy can take things from you. A levy can take money out of your bank account. If you're a contractor or anyone who deals with contracts, could be sales contracts, a levy can take money from the contract. So imagine you're building a house and you agreed on a price of $400,000 to build the house. And an IRS comes in with the lien and tells the homeowner, I know that you owe the contractor $400,000, but it's mine now. And by the way, the contractor still has to build the house. That's the type of stuff that gets really scary. You'll see there's a few ways that you get in line for that, which is years of unfiled tax returns, consistent debt of over $10,000, consistent under withholding or under prepayment of your tax liability every year. Those are the type of things that get you lined up for a levy.
Yeah. And that goes to show you the importance of keeping your numbers right so that you know how much you're really supposed to be paying, when you have that opportunity to pay. And again, it is about just, making sure that you have the proper software, proper apps, and everything else, and then you're upfront with what you actually owe, because it's an undeniable fact that you're going to owe something. So you might as well just accept it, right?
Yeah. Well, and also it surprises people when I go to fix these issues and I say, no problem, I can absolutely take care of this levy for you. I need a profit and loss. And now we're back to exactly where we were at the beginning of the presentation. Well, I don't have one, or it's going to take me a few weeks. I'm negotiating right now a very, very large debt for a client, very large client. And we put together a profit and loss. It took them a while. They are not up to date all the time. I got the profit and loss. I submitted it to the IRS with an offer of settlement. By the time the IRS got back to me, it was several months. They said, we're ready to talk about your offer. Can I have an updated profit and loss? I went back to the client and said, we need an updated profit and loss. Well, guess what? We're no longer up to date. And now, again, so now I have another delay because now I have to wait for them to put together a new profit and loss. So that's why it doesn't matter whether we're talking about dealing with an issue or being proactive or simply just being on top of things so you can borrow money or just be efficient. You really need to stay on top of your books, to stay on top of everything, to make sure that everything's always up to date and at your fingertips.
Yeah, absolutely. And what I find in those cases is that, business owners are scrambling. So they got everything all cleaned up, ready to go. And then they are still doing the things that they've always done, which is paying bills with their personal, right? So now need an updated profit and loss, but there's no record of what you've spent because you've been spending using your own personal credit card. So now we've got to kind of go through all of that and see, well, what was personal, what was business. So it's these habits that don't seem to go away despite the fact that, they are aware that they're in trouble. It's almost like, well, every time I speak with Patrick, it's done, right? Every time he solved the problem, it's finished, but yet this is an ongoing process and it needs to be, taken seriously. And we need to make sure that, you have put the proper workflow in place. I always call it workflow. Okay. Because it's just like building a house, and in the sense of there's a workflow to it, right? What needs to be done at the start. There's a plan, and you can't do this without doing that. And it's the same thing with your accounting and bookkeeping. So that is definitely something, and it should be a written out plan. When you're hiring some of the things I found is that, again, admin staff don't recognize the importance, don't recognize the workflow. So it's important to actually have some standard operating procedures available for them to follow. And if you can do that, you know, plan out how things are supposed to happen, when you're supposed to have them, what are the red flags when things don't happen that way. You can leverage your staff to help you with these efficiencies. And if you don't have that type of staff, then it's always great to hire someone who knows how to do that. So, let's see, what else have we talked about? I think I want to ask our audience, you know, some questions, or have them ask us some questions, I should say. I'm going to stop sharing for a moment. 1 second. Stop sharing and give our audience a chance to either, you know, to come off mute, if that's okay with you, Liz, and ask Patrick or even myself some questions that maybe you found in your business or a colleague's business. Anybody?
Absolutely. Thank you, Joanne. To the audience, please feel free to unmute, turn your video on if you'd like, and ask our presenters some questions. You can also type them in the chat box if you're unable to unmute.
I have a question.
Sure.
Hi, everybody. So my question is this. As you grow as an organization, you begin to realize a lot of what you said today, Joanne, and then you begin to know what you didn't know, and you become a little more educated. I would say, what is the best questions you can ask a partner, an outside partner, an accounting firm, a payroll firm, to know that they're the right partner for you? What are some good questions you can ask to know? Because there's a lot out there.
Yeah.
Not all of them are of the same caliber.
Right, right. I would say that you want to ask, you know, what's your method of communication? Because if you are the type of business owner now that wants to get involved and you want to know what you need to know that you're going to be able to call them and, you know, get an answer when you want to, or you're going to want, I think the biggest thing that accounting services or whatever they have is that they're very busy. And so you lose that, you know, they take a long time to get back to you. So you just want to know that, you know, how long is it going to take for you to get back to me? And when you do get back to me, can we speak on the phone? Is there a way for me to schedule an appointment with you? Or are we just going to email back and forth? You also want to know, you know, am I going to have the same clerical person working on my books? You know, or is it something that my books just get passed around to different people, just so that you know that you have somebody that you can talk to if it's very simple, and you know, you don't have to go through all of the hoops. So yeah, remember, when it comes to things like bookkeeping, you don't necessarily have to have a CPA who does the bookkeeping, but you should have somebody who understands workflow and maybe even understands your industry. Right. You know, so when you're speaking with them, ask them some business questions. Ask them, you know, what's your experience in this? You know, accounting is not cookie cutter. No, you know, don't get me wrong. There are some things that have to be done because there's GAAP rules. But, you know, if you're in a certain type of industry, if you're a nonprofit, it works different than retail. If you're a restaurant, it works different than a contractor. So find out from them what their experiences are and how they would handle yours, you know, in comparison.
Got it. Thank you.
You're welcome. I see a question.
Hey.
Oh, go ahead.
Oh, I'm sorry.
No,
if you want to take that one first.
No,
It's just
no. Go ahead,
software.
Mike.
What software do you feel is the best? I'm a QuickBooks mobile guy.
Okay. I mean,
should be using it much more.
Yeah. My own personal preference is QuickBooks Online. And I will tell you why. You know, they have the market share. Okay. So they are constantly bettering their programs, and they are, in my opinion, for the layperson. QuickBooks Desktop, in my opinion, has always really been for maybe an accountant or, you know, someone in the field. But if you want to be the person behind your QuickBooks so that you can do things like, and this is what I recommend for clients who are out there on the road doing, your kind of business, Mike, you want to invoice your clients, right there on the spot and send them an email. Those are things you can do. Sales receipts, they just paid you for, they just paid you for your service. You want to hit a button and basically email them the sales receipt. Taking pictures of your receipts, as you go on from one event to another, you want to be able to do that. So I say QuickBooks Online. Okay, I've got a.
Thank you.
You're welcome. I've got a question in the chat. Silly question. What is the difference between an accountant and a CPA, especially as it pertains to a sole owner of an LLC? I'm my staff. I don't pay payroll. It's just me, so I'm not sure who I need and how their services differ. So Patrick can also speak to this, but I will say from my point of view, a CPA is a licensed person who can do audits that are necessary for those larger companies that actually have audits. And when I say audit, I'm not talking about a tax audit. I'm talking about an audit of your financials, and sometimes that is required. An accountant is someone who analyzes your books in the sense of, they will help you gather the information that they'll need in order to review your books and have discussion with you on what's happening with your books. And Patrick, for you, I know you contend with this. Why don't you answer as well?
Sure. Yeah. So CPA is merely a license provided by the state. It does not grant you too many special powers over and above what a non-licensed person can do. I would say the main difference is a CPA can represent you before the IRS. The IRS allows 3 different types of people to represent you: an attorney, a CPA, and an enrolled agent. If you are one of those, then you can represent people in audits or offers and compromise or payment plans or things of that nature. People ask me the same question all the time. I am not a CPA. I am a lawyer, but I do a lot of the things that a CPA does. I prepare tax returns. I advise people on tax planning. I represent people before the IRS. So sometimes people call me and they say, well, you don't have a CPA. And I say, well, that's true. I don't, but I can still do all of those things. So it's more about understanding what the person you're engaging with is capable of doing for you, what they're willing to do for you. And as Joanne mentioned earlier, things like what's your phone call policy? For example, I return phone calls within 24 hours. The biggest complaint I hear from any professional, whether it be a lawyer or an accountant or otherwise, is that they don't return my phone call. They won't answer my questions. So really, that's what you're looking for. The designation CPA, I don't know if the designation matters. You just need the right person.
Yeah, absolutely. One of the things I've also found in, the differences in working with CPAs is that they have other people pretty much doing those transactional things, so it's great that they have this license and everything else, but at the same time, they may not be doing your bookkeeping. It's not really something that they went to, school to do. So it's a good, get in the door with you, kind of like when you go to the dentist in your 20s and then by your 50s, now stuff really is starting to go wrong. You know what I mean? So the fact is that you don't necessarily need a CPA in order to do your accounting and bookkeeping and keeping, things aligned. I have another question. Go ahead.
I was to say that's why Joanne and I work together all the time, because I don't do bookkeeping. I don't do payroll. I just don't do it. So when I have a client that I'm advising on tax and they need a bookkeeper, I send it to Joanne because it's just not what I do. And I think a lot of CPAs are the same way.
Yeah, absolutely. All right. I have something in the chat right now from our friend Murtaza. So hello, Joanne. Thank you. I got learn a lot from you. My question is, what are some of the pros and cons from working with an independent accountant firm versus a franchise? Well, Murtaza, there's a few differences. So I'm not quite sure which franchise you're talking about, but I will, based on some of the things that I've done some market research on, a lot of the franchise have one way of doing, doing your accounting and your bookkeeping. They have their rules and their standard operating procedures, and you have to fit into that. So it doesn't give you a lot of leg room to customize it based on the type of business that you have. So if you're a kind of cookie cutter type of business, that might actually work for you. But there are things that those types of franchises won't do. I know one particular one won't do homeowners associations because of all the voting rules and everything else that go on. So you really have to ask them the questions, see how strict they are. And the other thing that I've noticed with different types of franchises is that they don't really know your business. Perhaps if you are, kind of buying small, so to speak, you actually can get someone who can kind of grow with your business, understand what your real needs are, and ask you those questions that need to be asked. Those types of people notice things come up, as opposed to a larger franchise where you're kind of tossed around between different people doing your books. They may not notice that something came through. It doesn't look right. This is a duplicate. They're not making you aware of those types of things. So do you have anything to add, Patrick?
I think that's all correct, but I would also add, I've found that the communication is lacking from franchises because franchises tend to get more traffic because they're franchises. Like if you pull off of the highway and you see a McDonald's and then Joe's Burger Shack, you may be more likely to stop at the McDonald's because you heard of it before. And I think the same is true for accounting franchises. So they get more traffic. For that reason, they tend to be busier. For that reason, they tend to communicate with you less.
Yeah.
So that's another big problem I see.
Yeah, absolutely. Does anyone else have any questions? I think that's all for the chat. Anyone else have some questions you want to ask myself or Patrick? Okay. Well, then I think I'm going to turn it back over to you, Liz.
Thank you so much, Joanne, and thank you everyone for joining us today. We will be sending a follow-up email to all of you with a virtual business card list, as well as some helpful links for our sponsors and speakers and how to get in contact with them. So thank you so much again for joining us. We do have our legislative update tomorrow at 9 a.m. It will be virtual, and we hope you can all join us there. But have a great day, everyone. Thanks so much for joining us, and we will see you at an event soon. Take care.
All righty. Thanks, everybody. Thanks, Patrick.